Hello and welcome back to our monthly market update for July 2017. My name is John Rosenau and I'm the Vice President and Chief Operating Officer of MONECO Advisors here in Fairfield, Connecticut. In this month's market update, we'll discuss two major topics that influence our markets in July and examine how these developments may affect you as an investor. As always, please stay until the end of the video for a required disclosure statement. Well, our first headline is GDP Indicators and Projections. Gross domestic product is the economy's total output of goods and services, made up of consumer spending, which by the way makes up 70% of economic activity, business investment, government spending, and net exports. After a lackluster start to 2017, GDP saw some positive movement in the spring, particularly in July. This was mainly powered by consumer spending and a steady labor market. Business investments in plants and equipment grew by 5.2%. However, housing construction fell by 6.8%. Economists predict that housing will resume growth in the fourth quarter. In terms of predictions, even with the early spring rally, economists believe that GDP will not meet President Trump's ambitious targets of 4% growth. However, economic experts believe GDP will grow about 2.2%, which has been on target with growth rates since mid-2009. The second headline is Stock Market Update. Internationally speaking, U.S. stock futures were pulling back in the month of July due to the U.S. dollar losing its value in the international market. However, our Dow Jones Industrial Average, S&P 500, and NASDAQ all hit record highs at month's end. This was due to gains in telecom, energy, and consumer stocks, while being offset in losses in technology, healthcare, and industrial stocks. Further, rate-sensitive stocks felt gains after the Fed refrained from raising rates. So, what does this mean for you as an investor? The stock market continues to show strength and positive indicators, underpinned by a steadily growing economy. GDP continues to rise at a stable pace and is expected to meet expectations for 2017. Well, that's it for this month's market update, July 2017. Please come back next month where we'll discuss the Federal Reserve's balance sheet divestments, how the current administration's foreign policy may affect the marketplace. As always, thank you for tuning in, and we'll look forward to seeing you next month. Take care. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results.